Good morning. Happy post Monday. Happy Wednesday Eve to all of you. Having issues with CQG today. Um, my connection status has been intermittent today. So what you're seeing today is all SIM. And that is not going to mean that I won't analyze the markets in the exact same way that I would if I were trading real contracts. So of course, you have no impact on the market. So it is not as realistic, but that's okay. So I'm going to spend some time with you guys today talking about markets, analyzing, and we will, well, I guess we'll just quote unquote execute here on the sim. So full disclosure, it is what it is. So here we have the S&P configuration up, also got the NASDAQ up here. I like this as a short, let's see, what are we looking at? S&P 500. Okay, so I like this as the breakdown here on the NASDAQ just because of prior structure, where we had this rally up to this point and then a breakdown. Not a ton of trap traders, but enough, I think, to cause a little bit of a pullback here as we continue to rally. Who knows? Maybe we'll go find liquidity up here, take out stops, etc. But I would be wanting to re-enter up here if the trade doesn't work out the first time. So anyway, good evening. Wednesday. No, happy Wednesday Eve, right? Good morning, Dirk. Oh yeah, no problem, Andre. I did that with you in mind today. I didn't set it up. I just manually typed it in while I was on my phone. Looks like we're going to stop out of this SIM, SIM, SIM NASDAQ position here, which is totally fine. But we'll see. Again, trading SIM because I'm having intermittent connectivity issues with the CQG API today. I did a lot of trading last night, in case any of you follow my Twitter, and I was on fire. Which, you know, it happens from time to time where you're on fire, and you gotta just take it with a grain of salt. You'll be on fire sometimes if you have edge, and then other times you'll just be a loser repeatedly, and that's fine. That happens. So not a big deal, but it was nice to catch like maybe four. I scalped a little bit after the fourth trade, and lost a little on the scalp. I stopped out because I was like, I don't really want to give anything back, which is not the right attitude to have, I think. All right, here we go. Here comes the profit takers. Complex retracement plus boom. I don't know if I'm seeing what you're saying, Mr. Jack. Anyway. So the reason, again, for the short here is just that this market pulled back into the, again, this is a setup I've talked about before, guys. Market pulls back into the 10 SMA. We get buyers. We get a little bit of a rally and then sell bars. So who do you think's trapped from the morning? Right at this level. You guessed it, longs are still trapped from here. We can put a little we can put a little sell zone on it to make it more clear, right? Longs are trapped here off this zone, which is why you see they go into a profit a little bit. Well, I mean, there's longs everywhere up through here, but mainly on this pullback and rally. So they go into profit a little bit. As soon as they go into profit, they get aggressive sell side. So let's see. Short term, the markets trend up. But right now, the long remnants, they're aggressively trying to get out of this market. So if they flush it here, now if it comes back up, they'll probably sell it again. Right? So we've already seen what we needed to see from this bar to know that they're still trapped longs. What tends to happen on these things is if you're a little patient, what tends to happen is that the market will sell over many bars and come back and fill in an LVN or something. The question is, can you get your timing right for your day trades? You're going to get stopped out first, and then it happens? And that's why you got to be willing to re-enter on trades. Anyway, we're giving it a little bit of room here. Hello, Travis. For those of you just coming in, I'm on Sim today because I'm having intermittent CQG connection issues. I'm actually surprised that it stayed connected for this long already. Sucks, but it is what it is. I actually had a problem where the Sierra chart said, we're not even going to try to connect you until 2 seconds. Usually it's like trying to reconnect more frequently than that. So it's like, well, that stinks, but it is what it is. So I suspect it's not just me. Anyway, if you're here and you enjoy it, please like the video. I would appreciate it. Good morning, Raymond. Nice to see you here. And if you're new, subscribe. Hit that notification, and that way when I do go live, a lot of times I'm actually trading real contracts most of the time. I'll let you know if I'm not. Today I am not. So, most of the time this is like, I call the 1 to 2 p.m. hour algo o'clock. The reason I do that is because it's just dirty trading a lot of times. Hey, we got a little bit on the NASDAQ. We got a little liquidity sitting above us here. See that purple? 100 and, I don't even know how many contracts it is. Let's see. What's the big one? And where is it in the book? So at 660, there's actually on the MBO quantities 6, 12, 16, 7, 6, 9, 9, 5, 6, 12, 16, 12, and 10. A bunch of separate orders. I wonder where they are lined up in the queue relative to anything else that's there. Oh, thank you very much, Jack. I don't see any complex retracement today. It needs to be a complex retracement looks something like this to me, Jack. And correct me if I'm wrong. I mean, so you get a complex retracement. So let's say you're moving to the upside. Complex retracement would be 1, bounce, and then 2, with this being complex here, right? And then you get your rot here. So this would be the complex part. This is what determines whether it's complex. In other words, the pullback is two-legged like that, and then go. So I don't really see that super clearly, to be honest, because the retracement needs to be making lower highs, not just 2 impulses up, right? right? Or some kind of wave pattern or something. So, I don't know. Ah, I gotcha. It's not my complex retracement. It's Adam oh gosh, what's that? Technical analysis of stock or technical oh, I don't remember what it's called. The name of that book. The Art and Science of Technical Analysis by Adam Grimes. Anyway, they went up. They just filled that liquidity on the NAS. Here, let me get rid of this. My DOM is just a stinking mess. Mm-mm-mm. And let's see, did they fill any liquidity on the E-mini? Not really. But they did fill that liquidity on the NAS. Grimes. Yeah, it's Grimes. I have, Travis. Travis asks about harmonic patterns. Yes, Travis. But it's been a few years since I've used them. I used to use them in crypto back in the day, believe it or not. Because, it's all Elliott wave based, and crypto's a very emotional market. Alfred, yeah, there's no stream without mentioning the book. Adam Grimes. Hey, Kimster. I'm doing well. How are you? I'm Adam Grimes' biggest fan. I'm his #1 fan. Maybe. I don't know. I am a big Adam Grimes fan. Yes, I am. Got to give credit where credit is due. Dave, the rationale is that we have traders potentially trapped from this area, right? We had the morning highs pull back into the 10 SMA. You can see there's volume here. So you have these 3 sell bars, right? 1, 2, 3. And then this 4th one, now you have a green bar or a blue bar, right? And you have an attempt for another leg up, and then it fails. And when it fails on this next 5-minute bar, this 5-minute bar takes out the whole rally against the 10 SMA, and it's aggressive selling into yesterday's settlement. And so the point at which people get long here is usually a point at which there are remnant long traders trapped. So right now, not looking good for this position because we've now made we're coming back. We're probably going to take out this unfinished auction up here. You see this? And now keep in mind this NQ chart here, this footprint chart, is aggregating 4 ticks. So I don't really know what it looks like on a individual, quarter point tick basis. I only know what it looks like here based on 4 tick increments or 1 point. That's how I aggregate my footprint for the NASDAQ because it moves so much, right? So, but this is incomplete. In other words, interest to buy and then aggressive sellers up there. So we're counting on this eventually rolling over and longs from that morning rally then pull back to hold trap longs. And we're counting on this level here. We'll see. We'll just see. But we're counting on this level here to hold stops. And for this low volume node to fill in down here. Are your stops down here? Ask yourself that. If you're long somewhere in here expecting more upside up here, are your stops down here? Yes, they are? Okay. Well, they'll probably hit them. All this low volume in here. Now there were buyers in here and there was absorption. Did they get short-term compensation? Probably. But your stops are below here. They're probably going to go get them right now, short-term. Let's see. And if some of you are big and you're getting aggressive here near range lows, I wouldn't recommend that either. Right? I'd recommend trying to get short with the stop above these highs because that's better location. The market always punishes the weakest hands short term. It's kind of a mantra you can live by in trading. Try and figure out who the dumbest, least capitalized players are and where they likely trade. Hint, they always trade what's obvious to everyone and what's taught by the greatest number of guru furus, and play against them because the market typically moves against these weak hands and stops short term. Market goes and finds this liquidity and these people capitulate as it gets closer to their stop oftentimes, which is why markets move the way they do. So let's see. Market's just holding up here. A little sideways activity. 3 seconds. Holy cow. Yeah, it's not intended. I mean, it's just low latency. I don't know. Man, how many times could we have taken profit for less than 1 R in here? 0.5 Rs? Yeah, so you can get high win rates. 0.5 Rs if you get semi-decent location in a consolidation region. You're like, well then take it. Oh, that's hindsight trading. Anyway. So there you go, Dave. You guys are just getting on the stream and you appreciate the explanations. You scratch my back, I scratch yours. So I would appreciate if you guys can like the video. It helps with the YouTube algorithm and getting more views later on. It kind of can buy me a cup of coffee later. So Dave Gagni asks, how can you have positive expectancy with 0.5 R? So if your win rate is very high at 0.5 R, what would that win rate need to be? So Dave, here's what you do. You just go find a Monte Carlo simulation tool, which you can find them on Google, and put that in. And adjust your win rate to see what will produce positive expectancy. I've done a Monte Carlo simulation video on that. So here we go. Oh, thank you, Andre. I really appreciate you. You know, Andre, is there a way I can block you from doing this every day? I actually feel bad almost every day. And I know you appreciate what I share, but golly, man. I'm going to get your address, your email address, and I'm going to send everything back to you. I swear. I know you appreciate it, but you're like the only one most days. In all honesty, my conscience is like, I just have a difficult time. You are just too kind, my friend. Honestly. Here we go. Here we go. I hear you. That's what my wife told me yesterday. She goes, babe, if you're sharing some trade setups and Andre might be taking them, just a few ticks, he's getting a lot more. So I'm like, yeah, I know, but still. I've never had somebody appreciate me so much. Here we go. Let's take off a little bit here. Can we just have a winning day a little bit? It's, again, this is a sim, dudes. I'm going to have like no slips. All right. Anyway, golly, I couldn't do it fast enough on this damn NASDAQ. Look at that. They found the stops. That sucks. All right, down to 2. We'll do this. You know, one of the reasons why oftentimes when you get a move like, so I'm going to explain something that can make you guys money or save you money, okay? One of the reasons, yeah, this has got to be killed. Hold on. Hold on. So I'm going to trade seriously for you guys. So one of the reason I will kill a trade that does what it just, here, let me flatten out all of them actually. Here, hold on. Okay, now I can talk. Concentrate. All right, so one of the reasons that I will kill a trade, let's see, I am on the NASDAQ. Wait, what happened to all my screens? What happened to my screens? You guys aren't seeing the stuff on the bottom, huh? What the heck? All right, hold on. Yeah, I don't know what happened down there on the bookmap style. Let me switch over to the ES real quick. Oh, they're there for the ES. Huh. The NASDAQ ones are like, nope. Interesting, Brian. Anyway, one of the reasons I kill a trade like this on the first move down. So, are we on the E-mini? Yes, we are. Okay, is because when you have a level like this, right? And it comes into the 10 SMA like this, which is, you know, this is the 10 SMA right here, right? That yellow line. And then the move, it comes out and then it springs back into the volume right here. You get a very high probability, and it's going down now. It doesn't matter that it's going down now, but you get, just in terms of moves, you get a very high probability of essentially the market's telling you it tried to break down below these, here, it's already messy, below these stops, or where there were stops. It came down, there wasn't much volume, there was no impetus to sell it. So when the market comes all the way back into the middle of the range like this, and yes, it's testing these volume nodes here, and it's pushing down off of these volume nodes right here, right now, right? Here's our current price line, moving down. But the market is telling you on the impulse back up here that it can very easily move back into volume. Hey, they could fake out this thing and roll it over. They can do all kinds of things. There could be strong players allowing it, trying to suck in more longs. I could be the one faked out. They get my stop, etc. But the probabilities, and again, this could just go straight down. I don't care if it goes straight down. I'm simply playing the setup. And the setup is, you found stops, you came back in the middle of the range. Well, the probabilities usually in that scenario favor upside. That's not what it's doing now, but that's okay. I play over a much larger data set, and that keeps me safe in those scenarios. Hence why I get out. You're like, well, shit, you really wiggle a lot, don't you? No, that's a specific setup. That's a very, very specific setup. I'm on the wrong screen. Yeah, thanks, Alex. I'm over here doing stuff on the wrong screen. Apologies here. I'll re-explain the whole stinking thing. All right. Attempt number 2. So here's the 10 SMA right here, this yellow line. All right. The market found stops underneath these lows here. It bounced on the 10 SMA. The blue line represents upward movement. It came all the way back middle of the range. It did reject short term against the volume built in here, which is green. You guys see all that? Came right up. But the fact that this market came down, there was no impetus to sell into this area, and they could have done it easily if they were positioned short. They could have sold aggressively and impulsed this market back to this range and then tried to distribute out into the low volume node. They didn't do that. Instead, the market, right, the majority of players in this market allowed this price to come right back middle of the range. Selwyn Hansana. I mean, you could say there's no follow through, yes, but it's the action. So it's a little more nuanced than that. It's the action to come back to the middle of the range. What you want in a breakout, right, if you have a consolidation, is you want price to extend down, yes, and then come back to the bottom of the range, build out volume node, and then roll over. That's what you want. But when you get a peekaboo, and then it whoosh, antes, to use Adam Grimes, right back to the middle of the range into the prior volume nodes very quickly, and they don't really defend it with volume, then your likelihood of staying short and having it be a successful trade just went down. That's it. And so when I get out of this sim trade, because I'm having connection issues with CQG today, so I am on sim, guys. I said that now 4 or 5 times during the video, just to be sure. But it does not mean I'm analyzing any less seriously. Okay? I don't waste my time with taking crap trades if I'm on sim. I'm going to try and trade sim the exact same way I would trade my actual account. Okay? So, just an FYI. Alright, we're getting a little bit of... The ticks are getting more positive here. So we'll see. Anyway, the fact that we tried to break down, anteed, came back into range, gives you immediately context. And so you can cut it when you see that for a small winner, or you can just hold on to your trade with your stop up here, not recognize that that happens in the market. It chops around, and maybe it takes your stop out, or maybe it doesn't, but that's the context to get you out of the trade. Best trades in this situation do exactly what I was talking about, right? They impulse, they build a volume node, they defend it, and then they push it down. So, this trade may still work out if you take out this volume node and take out this low. It may work out over time. But anyway, that's the reason I got out. I'll give you guys a nice full explanation. And meanwhile, look, you made 11 points. But you know what? Who cares? That's nothing. Don't worry about that. You're only playing probabilities. Don't play your P&L. Play the probabilities of the trade. So, yes, once you realize that it's coming back up, try to get out at break even if you can, or try to get out with a few points. At that point, it's execution, right? I guess we're going to keep it on the ES because I don't... maybe I can put it in studio mode and start editing the NASDAQ to fix it all, but it's annoying that it's not doing what it's supposed to do. Something broke it. What broke it? That's my question. Anyway. Fix my OBS. What's up, appraiser guy? Yeah, thanks, Brian. Let's see. Um, Alex, eating ice cream. Very nice. Dave. You know, Dave, I almost want to pull up a Monte. So, just so people can know what we're talking about, I want to pull up a Monte Carlo and put it on one of these screens. You guys have to realize that all of these screens are coming from different areas of my chart. And so I can't just put up a big screen and have it cover the whole screen. So I can put up the Monte Carlo right in this footprint chart, which is the biggest area of my screen, but you'll only see like a tiny portion of it. And I guess I could try and zoom it in my browser or something. So anyway, that's what I'm dealing with right now. It's not just one big screen. I don't want to mess too much with OBS here live. Mess it all up. Anyway, I'll go open up Monte Carlo simulation. We'll do it. We'll do the 0.5 R's. Hold on, we will find it, and then we'll put in. Here we go. Da, 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 da. All right, 0.5 R, risking 1%. All right, let's get this. Zoom out. All right, that's negative expectancy. So 0.5 R at 60%, as you would probably guess, gives you negative expectancy most of the time. Over 100 trades, 200 different Monte Carlo simulations. All right, we're going to find more here. 70%. Here, we'll detach this. I will shrink it up and let's see if I can get it to be the right size here. It's going to go over. Can't see the chat anymore, so bear with me. Actually, we'll go right here. That'll work. All right, go back to the stream. Declan says, I'm short from 36s here. Auction has lost momentum. We're putting in short-term lower highs, but there's still a lot of buying. Yeah, Declan, we still have the BBWC going on, right? That's still part of it. I just short-term, that failure to break down was a massive clue that you need to be out of short positions short term, right? So the next 5, 10 minutes, 20 minutes. It just gives you a hint, right? Anybody can negate your edge and sell from here, right? Any trapped long, if we try to go into liquidity that's sitting up here, this is 250 lots or greater is what's showing as red up here. And you can see it's 283 lots, right? Anybody could negate your edge. So here, now you can see the MBO a little bit more clearly. Here we go, 250 lots up here. That's why it's red. 283 lots. So the long, it could poke up here and then just shoot down. But short term, these players are allowing it higher. So they're not trapped, they're holding. And they're betting that you're all short here in these nodes. At least short term, that's what it looks like. Because they had you here on this bar. And then somebody came in with a little ice down here. You see that? 100% ice at the bottom. So, and it was, same player from here. You see that? So exact same spot, boom. So this is market depth historical graph, this red. They bought here passively. They bought again here. So it's just an interesting thing. Maybe they're building a position, right? You guys have seen me do this where sell, sell, sell. Buy, 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 sell, 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 buy, buy, buy. All with the hope of raising my average price somewhere way up here and then trying to defend in here for an eventual rollover. They may be doing that. But again, my short-term thesis changed when I saw that. So anyway. All right, back to the Monte Carlo simulator. All right. Who was it that asked about it? Dave Gagney asked about it. Hey, if you guys are just here, please like the video. It helps a lot. I appreciate it. Okay, here's the Monte Carlo. Let me make sure I'm not showing some weird thing here. Get rid of that. Get rid of this. All right, move it around. Monte Carlo. You guys see that? Okay. You guys see it okay? Or is it cutting out the bottom? Okay. So, Pauvre Lapin. Sounds like a French name. I like it. It says Monte Carlo Simulator. Okay, here it is. You guys see it okay? Yeah, making money always feels good, Kermit. Well done, my friend. So, starting capital 25,000. The percentage risk on account per trade, we're risking 1%. Are at a 70% win rate with 0.5 R's or risk reward average. So your stop is, say, it's a ratio, but for simplicity, we're saying your stop is 1 point, your take profit is 0.5. So each line represents a single Monte Carlo simulation of 100 trades. So this is 200 different simulations. So what you want to look for in this situation is about the average. Now, in reality, in real life, because of your the order of wins and losses, which you can see here, right? This is randomized wins and losses, and this is here as an example only. You can see at 70% win rate, you're going to start out losing in some scenarios $250 right away. But then you get a number of winners, right? Win, 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 loss, win, win, loss, win, win. And so because the order is randomized and you're dealing with compounding math, meaning whatever you're always risking 1% on your current account balance, your draw down or draw up is different. So some people are going to be very unlucky with the orders of wins and losses, even at a 70% win rate, and they're going to have less than 25,000 at the end of 100 trades. And so that simulation represents 100 trades for that trader. They're going to be way down here. They're going to have lost 2 or 3 grand, right? So about 2,500. The vast majority are somewhere in here. They're like the mean or the median or whatever. And then there's some really lucky people that go from 25 to like 31, 32,000, right? But that's an outlier data-wise, right? So the expectancy at 70% win rate with 0.5 R's is somewhere down the middle, right? And you could be the unlucky SOB that has negative expectancy overall, right? You have a drawdown on your account. Okay, so let's go. Let's change this. Winning percentage. All right, we're still at 0.5 R. So we're answering Dave Gagney's question. What if it's 75% win rate? All right, it's replotting it. Haha, very little. More are coming in around, for 100 trades, more are coming in winning, right? Above the break even here at 25,000. Probably can't even see it, but this is right here. This is 25,000 starting capital. So more are coming in above the essentially zero line here, right? A lot less here, right? So depending on how you start in the simulation, maybe you get a bunch of wins all in a row. Your starting capital, it looks good at the beginning, and then you keep risking 1%, and you have a 75% win rate. Now, one thing that's interesting, in trading, in reality, when you have a 0.5 R setup, it means you have what? Let's say you're going short. Your entry is the red line. Your stop is the blue line because you have to buy. So your stop is wide. And your take profit is also a blue line because you have to buy to cover your short. right? So 0.5 Rs would be somewhere in here, right? Now, the market's, let's say the market's coming up. It's trading, and then you decide to enter your short around this time when the market's consolidating, right? A much wider stop has a lower probability of getting hit, doesn't it? Right? Especially if you set up your trade after a long Elliott wave impulse or something, right? You've seen a I don't know, some sort of Elliott wave top with and you think we're about to be into the ABC corrective wave, but you know they always like to distribute out at the top, so you think that that's what's going to be happening here, is that they're going to have a corrective wave. This take profit allows for what? It allows for the false break. You get out in profit at 0.5 Rs, the ante, according to Adam Grimes, essentially, and break back up. But again, your stop is twice the distance to the goal line, or twice as big as the stop, or as the take profit, sorry. Cracking myself up with football analogies here. Anyway, so when you lose, it's much bigger. But you can see how if you play this way in a consolidation, you can have a much higher win rate. So that is actually reality in the market. If you have edge, if you have decent location, if you have a closer take profit, you can have typically a higher win rate, right? So, and conversely, your risk reward, oops. Yeah, well, whatever. Okay. If you have a 60% win rate, well, with 0.75 Rs, right? You see how there's a lot of people now below the zero. Here, let's get rid of all this garbage. There's a lot of people just breaking even here, as you would kind of expect. Now, you might be in a highly volatile situation where you're timing things well short term. And so at the beginning of your 100 trade series, you're winning a lot. And you end up being the person or the trader, you know, you're this this pink line. Let's see if we can follow it. It goes in through here. Boom. And at the end of it, you're like, hey, I'm up 2 grand on a $25,000 account. I'm up, what is that? A little under 10%. You're like, you do that, 100 trades a month. Ha! I'm a part-time trader. I'm awesome. What you have to realize is if you repeat that 20 more times, with this probability, you may be down here. You may be in the middle. You may have one lucky month up here. You may have one very unlucky month. So you see how with trading, when somebody like me repeatedly says stuff like, I have edge over the long term, so I'm not worried about this loss. You can see now why I don't worry so much about one trade. Anyway, you got to look at the larger data set. And that's why tracking your trades is important. Looking at these things, looking at your setups, analyzing, and knowing, here, let's just close out of this. Knowing what your stop loss is before you get into a trade, here, let me get out of all this, is so important. Because you shouldn't be getting into trades like this. You know, I'm getting long here. Boom, right? Oh, well, sorry. I'm getting long right now, and I'm targeting this. Well, what's your stop? I'll figure out my stop after the fact. Well, where is it going to be? Is it going to be under the lows? We're like, I don't want to get stopped out. I might get That's too close. Okay, well then change it. But if you don't know before the trade happens, what if you get into the position and you're one of these people that you're like, number one, I don't play with stops. Number two, when I do play with stops, I have a safety stop in, super wide, in case there's a black swan event. Is that going to change your risk reward profile over a longer data set? Especially if there's volatility. What if you get a 10-point wick? And that happens too often to you. That changes your whole risk reward profile. Okay, so you need to figure out when you get into a trade, what is your stop going to be? Where is it going to be? Where's your take profit? Figure that out for the setup that you're entering beforehand. Otherwise, you're going to be one of these people that gets into a trade and moves their stop. So did you really trade your plan? Well, I traded my plan because I knew where my take profit was going to be. No. That's not how people who play this game over the long haul and are successful at it play. You know what your stop is before. So if you're watching anybody or listening to anybody that doesn't play with stops or isn't defining it for you early on, kick them to the curb, because essentially, hey babe, essentially what you're doing is you're learning to trade the wrong way right from the get-go. It's like having a business plan without any kind of exit strategy, and you just piss away money nonstop. Don't do that. You need to understand your stop loss first, which is why in the old Discord that doesn't exist anymore, when we had people journal, you had to give us your stop. Otherwise, your bragging helps nobody. Some people lied about it. My stop was way over here, right? They enter. Hindsight, they move their... Now, let's say I enter here, right? Let's say I enter. I'm just going to get rid of some erroneous thinking here. Let's say I enter right here, right now. And I'm doing this. And the market, my stop is originally right here. And the market starts to move up, right, in real time. Okay? It starts to move up. Let's say the market does this. Then I turn around and I'm like, I move my stop here. Your risk reward on this trade is not what you moved your stop loss to after the fact. It's wherever your stop loss was at the beginning of the trade. Because at the beginning of the trade is where you start to take risk. And I see traders do this all the time. Like, look at my trade. Look at this setup. 17 Rs, guys. Aren't I the man? No, you dummy. Your 17 Rs are not 17 Rs. Your real trade is 1.89 Rs. Okay? Don't wait until my price moves up and then redefine your risk reward by moving it. And then bragging to all your friends, ha, you have a real entry here. And you say, huh, I bought here because we broke the highs and I tightened up I didn't tighten up. I had a stop here after the fact, right here. It either worked or it didn't. No, don't do that. That's not proper trading. Anyway. Declan's over here talking about his short position potentially. Someone's buying against an iceberg seller. They're going to get smoked here. Stops on the other side. Hey, there it goes. I started to talk about it. See how fast it happens? I was already going to talk about they're going to get smoked. But it doesn't matter. I can't talk fast enough. Anyway. So Dave Gagney says, if you have a plan in place, then why cut trades early? Because if you get more market generated information, Dave, and it's kind of like, oh, you're taking a golf swing and you're driving that golf ball in the same way down the golf course every time. You're like, I'm pointed this direction. This is my swing. I'm just going to keep hitting it. And the wind changes. Do you adjust? Now, if you're somebody that lacks nerve endings everywhere over your whole body and you can't feel the wind, well, then you need to just play according to what is worked over a huge data set for you as a human being. But if you've got good nerve endings, i.e. edge, and you're able to see that you're getting little signs of strength in the market, then you can cut it. So Dave, I wish it were all so simplistic. Right? Always take the same swing every time, and hopefully the wind conditions don't change. And you know, if that works for you, great. The fact of the matter is for some of us, we have more of an understanding of the market short term. We can play with more nuance. But of the vast majority of people, can't play that way. So yeah, you're right. Good question, Dave. I hope what I'm saying isn't lost on the majority of people. Because what I would hate to be suggesting, or hate to be implying for a lot of traders, is that don't let your winners run. Don't trade your setup. Every time it goes against you, get out of the trade. Because that's a slippery slope. Very slippery slope. Hey, good afternoon, Aaron. Andre Dennis says, BBWC. I don't know where the BBWC is, Andre. Anyway, if you're here, you like what you hear, throw me a bone. Like the video. It helps with the YouTube algorithm, guys. Keeps me on. So annoyed with the fact that I can't do the Nasdaq plus 3,000 tick again. We got some liquidity above us. And look at all this resting liquidity lined up here. So 41.50. So Dave says, I'm just trying to see what your trading plan is. So are you a scalper? Scale in, scale out? How many ticks are you going for with ES? Dave, how long have you been trading, Dave? I'm not feeling attacked by your comments, but if you just joined the channel, then I understand your questions. If you've been around, then you're like, and you can kind of hear what I've had to say. Maybe check out my Twitter and all that. You'll be like, oh, he is a scalper, but he also plays big levels from time to time. I am predominantly a scalper. A lot of 3 and 5 point hits all day long, aiming for around 1R. No, Dirk. He's actually asking the very best questions. What Dave isn't doing is he's not acknowledging my arguments at all, which makes me think Dave might be trying to troll or or ask questions around his own narrative. So I like two-way dialogue, right? Questions are great, but if someone gives you a fairly rational um, argument, well then you go back and forth, right? You have a conversation where you acknowledge each other's points. Dave's not doing that. Good morning, Shane. Oh, I got you, Dave. No worries. Yeah, I mean, there are just some people that have very strong opinions about risk reward, and they like to use simple compounding probability graphs that assume no Monte Carlo. And Monte Carlo's role in trading is to assign randomized distributions of wins and losses, which is a lot more realistic to what happens to us as traders. So it's really difficult for me to give you a small number of trades and go, here, extrapolate this out for how I trade everything all the time, where I use a lot of discretion. I'm a discretionary trader with a fair amount of experience, right? And so I'm a little bit more nuanced than, this is the setup, here's the risk reward, and I'm not going to change my opinion when a big gust comes along and is sustained at 40 knots, right? And there's clouds. You know, when I get market generated information, I change. And I change on a very small time frame. So what kind of trader am I? I scalp. And I also, if you've watched any of my hours long videos where I show people how to find levels, big levels, I also trade and hold positions for hours around big levels that I've predefined based on, 2, 3, 4 hours on the weekend looking at market profile and levels. You can go back and watch those videos. I'm not going to explain it all to you in 5 minutes. I can't do any justice to my trading style by trying to explain it. Someone, Super Walnuts, asked me, hey, can you give me a nice, short, concise video trying to essentially tell me how you trade? Like, no, I can't, actually. And they understood that in the question, but I can't. So, Dave, I wish it were so simple. I wish I could just say, here's a nice, neatly wrapped gift. I know you want to be a trader, doctor, surgeon. You want to be the best. You want to get paid. But it's simple. Here's how you do it. If you believe that about the market, and I'm not saying you do, but if any of you guys believe that about the market, I have some vendors for you. You can go buy some stuff, and it'll give you signals all day long. And when it doesn't work, you go back and ask the vendor about it. They'll say, well, you didn't know how to use it right. Kind of the same idea. There's some validity to that. Yeah, it's all good, man. Oh, yeah. Hey, Dirk, how about this? Watch this. There you go, Dirk. Boom. Dirk, you now have powers. The only person on this whole chat that has powers. Nobody's getting paid to do this, Dave. We're all just here enjoying the markets, like you. So these lines up here, this purple is I think 400 or greater. Yeah, 400 or greater. The red here is it's interesting. They only added liquidity as the price got kind of up, and then they took away. That's interesting. Oh, Dirk! Dirk has the blue! Do whatever you want, Dirk. You think I care? I'm pretty chill about these things. You're like, is that how I get to be a mod? Say I'll kick people for asking good questions? Sure. No, I'm just kidding. Great questions, Dave. It's all good. Keep them coming, my friend. My favorite color? Oh, is it? It's like the color of my wife's eyes. Nice cornflower blue. Mine are not cornflower. Mine are like greenish. I did a little cartoonized, what is that called? Caricature of myself and made it my profile picture. And it kind of made my eyes look gray blue. They're not. They're like green. Very green. Greenish. More greenish, yeah. Anyway. Aaron K 450 says maybe it's kind of like being a fisherman. Sometimes the fishing is good in your usual spot, and sometimes it's not. But you always have to pay attention when the storm clouds appear on the horizon. Yeah, I mean, trading is absolutely like that. But the danger of repeating that early to new traders is that they cut all their winners short, and all their losers go to full targets. And you want to let your winners run sometimes. But the nuance and I keep saying nuance. It's not really nuance. It's the danger of doing that is very high for new traders. I would suggest if you're newer to trading and you're not so great at looking at market setups, and futures are tricky, guys. If you're trading futures, futures love to fake out and go the direction of trend. Right? Shake out all the weak hands who want to fade trend and then go direction of trend. So futures are sometimes not very linear in the direction they move. It's not just like, mechanical pullback and then boom, go. Futures are kind of known for breaking the upside, breaking the downside, and then original trend direction. Right? It's just kind of known for that. So the danger in repeating what I've said, which is what I did, which is get out of a trade where I explained why I got out of essentially this short because of this action here. The danger is you don't know how to read the market. You don't know it. You have not a lot of experience. You've only been trading 6 months. And you haven't seen the scenarios play out over and over and over in real time. Hey, a little bit of liquidity added to the bid here. 435 contracts. It's a 435 lot. Right there. That's MBO data, 435. That's what that is. Anyway, so the danger is that you repeatedly see, oh, well, price has moved up, and I don't really know about the 10 SMA. I don't really know about, a market showing strength. So I have other charts up, not just this one. So I'm looking at the weekly value area high on the 30-minute chart. I'm also looking at a 5-minute chart and how we're reacting and what level we're holding against the 10 SMA. That's a short-term price action thing that tells me about the volume nodes and what happened here. But I'm making a decision to get out of a short trade because I think my stops will get hit and I'll be a big loser. All right? And I had a scenario where if we move down and move back up and then build volume, I'm still in the trade. And I'll probably add to that winner what I think will be a winner, and I'll let it run. And then maybe I move my invalidation point down a little bit, because at that point you wouldn't want to have a pullback and then a complex retracement and then a bounce off the 20 SMA. But see, I have planned scenarios for the way that the market activity should occur after my trade, and you're like, BS, you can't call it that well. Okay, fine. Most people can't. I agree with you. They're like, now you sound like a furu, you lying SOB. All right, stick around for a few months, talk to me about markets, and then see if you still have that same opinion, okay? But when you get better at being a surgeon, you notice more detail. And as you notice more detail, you start to see, I'm on the golf course. I see some, whatever, nimbus clouds rolling in. The pressure has changed. There's some big, I'm by the sea. There's some big waves rolling in, or by the ocean. There's some big waves rolling in. Starting to put all these details. There's these birds that usually fly in a certain way, and they're flying directly away from dark clouds. Way out yonder. Maybe I'm going to call it a day on the golf course. Right? I think what's coming is something where I just need to be flat. Okay, if you're a brand new trader and you don't know about FOMC, but you're like, I only trade price, ever, but you don't know about FOMC, we would all agree you're ignorant. You don't know enough, right? You don't have enough knowledge. Because we all kind of clearly agree that these are catalysts for the market, and they cause short-term price volatility. But for all the people that are taught TA only, they have these exceptions, don't they? Except when J. Powell is talking, Jerome Powell, and except when there's non-farm payrolls, and except when Apple has earnings, and except when Microsoft has earnings, along with Amazon, except when Amazon has a split, right? Now all of a sudden all these exceptions are coming in. Well, I'm not really trading that. Well, cash is a position too, right? So you're taking a cash position because you're allowing data to come in that alters your trading routine. So don't tell me you only trade technicals. Anyway, enough of the rant. Anyway, I don't even know where I'm going with this. Dave says, okay, liquidity above. Based on today's context, do you think it will play out? What will play out, Dave? Dave's like, go predict the future for me. I've been trading live here for 2 or 3 weeks. So you can go look at all my P&L based on my scalping. Go add it up. Oh, I have no idea. I have no idea, Dave. We're trend up right now. We're equal highs on the NASDAQ. We've double topped here short term. We're kind of middle of the range. We've been consolidating. If you put a trend line on the NASDAQ on a 30-minute chart for regular trading hours only, over the tops of the candles, we've broken a trend line. But, yeah, I mean, in terms of where we've been going, we've been trading towards liquidity. So there's a good probability that we continue to trade up towards liquidity. When in doubt, go with trend. On the footprint, all these folks in here got roasted. So this area had positional players who are all wrong. Little consolidation, it moved up through the liquidity. Now this liquidity that was resting here is likely to hold lots of trap traders. Why? Because this was visible liquidity. And what do we know about folks and visible liquidity? Everybody sees the liquidity on the book and they like to position ahead of it because it's known. It's not like they distributed it out of a position over 6 or 7 or 8 ticks, right? The way institutions do it. This was some dum-dum, maybe, putting resting liquidity there. And maybe the smart ones were buying here, and that's their resting liquidity. And, you know, Dave Gagne number 2, billionaire Dave Gagne number 2, who's on DM with Dave Gagne number 1. Dave Gagne number 1 is long through here, and he's putting a profit-taking order here. And Dave Gagne number 1 is DMing Dave Gagne number 2 saying, and you might think this is going to be a useless hypothesis or story, but it's not, okay? Just follow me here. So Dave Gagne number 1 says, hey, I'm putting my order here. Hey, Dave Gagne number 2, you buy this thing? It's going to de-risk me. I'm going to free up a lot of margin. I'll keep buying. So if you buy this thing, I'll keep buying. And then you can distribute out. Just don't do it heavy up here. I'll support this with the bid, but you get out up in here, and we'll make sure you have at least 20 minutes up here. Now, anything can happen. Time is risk, right? Biden might get on the podium and say something stupid. Well, that's almost a guarantee. Any of our politicians are going to get on the podium and say something stupid. So that's going to happen. But he may say something that causes volatility. Jay Powell may come on and say something. Anything can happen. Anything can happen. Hence why I posted the 5 principles on Twitter yesterday from Trading in the Zone, Mark Douglas. Anything can happen. Any trader anywhere in the world can negate your edge. So there's only probability, and you shouldn't perceive all market information as threatening, but perceive it. Okay, so Dave Gagne number 2 says, okay, I agree to that. Meanwhile, retail traders are like, is this guy short? Is he short from here? Yeah, he's probably wanting to short. That visible liquidity, I'm gonna try to sell with him. Hence, why look, there's the visible liquidity at this level. Where did they fill a bunch? Who filled a bunch? See this green? Here, I'll widen it out for you. You see this green? High volume. Who filled ahead of all the visible? See, the visible liquidity is here. This line, and another line here. Visible liquidity. Who fills ahead of it? All the dum-dums who see the visible liquidity. You're all weak hands now. Why? Because all the dum-dums look at the order book and go, I'm going to sell ahead of all the visible liquidity. Now you're like, if only it were so simple every single day, Mike. You make it seem like it's so simple. No, there is a context and a story. The context is forget about the whole story without the prior market structure. Here's the market structure. Right here. Balance. Loads more contracts here. And you're worried about visible liquidity here? Yes, all of you do worry about visible liquidity here. That's how you roll. And people like me bank on the fact that that's how you roll all the time. You're so worried about visible liquidity. You're so worried about order flow in the next 2 seconds. No. Look at a footprint and see where the volume has been building. Then make your bet. Anyway. Up we go towards the visible liquidity. Everyone step in front again. Look. Went through. More visible liquidity. So it's 125, 11, and 11. is what makes up that 300 lots there. As far as large resting liquidity. Does it mean we know exactly where it's going to go every single time there's liquidity? No. You gauge where you think the market may go based on the reaction to actual buying and selling, absorption and initiative. That's it. That's the game we're playing, and that's why it's so complicated. Because the market dynamics are shifting throughout the day. You go from a pure trend day to distribution to reversal 50% of the whole move. That happens. Then you have trend days that never reverse. So what's the MGI or market generated information on that day? Sometimes it's just there's no selling. And guess what? You might finally get confident 30 minutes before the close and start buying, and it reverses on your face. There's no guarantee of anything. Anyway, that's why somebody said in the chat the other day, trading is more alchemy than chemistry. You guys know what that means? It's more art than science is another way of saying it. I don't know that I agree with that. I don't know that I truly disagree with it either. Maybe somebody else can explain the difference and when one is more relevant than the other. But anyway. Can I kick myself, says Dirk? Maybe. Do you want to? That's the bigger question, Dirk. Vedran Radic says, do you live from trading? Yes, Vedran. I'm a full-time trader and I have been for many years. So I live from it. You know, I described on a live feed, live stream, maybe a week ago, the difference between people who are trading. There's people who are on sim. There's people who are trying to do funded accounts. There's people who have funded accounts. There's people who trade their own money, small amounts that don't hurt them part-time. There's people who trade part-time but trade amounts that will hurt them. And then there's people who have built up a nest egg or enough money to trade for a number of years that don't really have to be profitable right away. That's another category, but they're full-time traders. And then there's traders who rely on their money to pay their bills. And that's another level of trading. So there's like 7 different magical number. Ooh, 7. There's like 7 different levels of trading out there. Probably, more like 21 or 28 when you think there's all these subcategories, right? There's prop firms and all this other stuff. But, psychologically, it's a lot different to trade your own money than trade a prop firm's money, or even trade, in a funded account, or to be on a sim. Right? There's all these different levels of, and trading is more about psychology, in my opinion, than almost anything else. Right? Because if you get in your own head and you use MGI to get in and out of trades, right? So in other words, you don't just click and forget about it. Psychologically, you could beat yourself out of trades all day long. All day long. And in hindsight, I do that to myself too. Doesn't matter that I'm a quote-unquote professional. I do it all the time. Because in hindsight, I can always do better. But I'm at a point where when I cut a trade, honestly, I don't sit there and cry over it for any period of time. I'm like, nope, I know I cut the trade and I'm happy with that. When I cut this short, all these shorts, down in here, could I cry about I'm not long now? Right? So if what I expect to happen, which is the short side, doesn't happen, could I beat myself up and say then I should have been long? Sure. But I miss trades every day all the time. It's okay. I will be doing this probably, unless I retire, for the next 10 years. I'm not going to be one of those people that is done in the next month. I've been doing this for a decade or more, well, more than a decade now. And I'll be doing it for the next decade unless I do something stupid or lose my cognitive function, blow up all my accounts simultaneously. Enter a position with my futures trader, then the market goes limit up or down against me, and then it gaps against my position, and it's so freaking big that they're like, we're coming after your other trading accounts, and we're coming after all the money you have in your bank account. That could happen. It could, but I'm not going to let it happen because I don't trade like that. So anyway, I will be doing this. That's kind of like saying I won't die from jumping off a cliff unless I jump off a cliff. Well, I have no plans to jump off a cliff as a trader. So anyway, enough of these rants. Let's look at the market. Talk about the market in the here and now and see if we can generate out of the information that we see. Let's see if we can generate enough information. Oh. There you go. Let's see if we can generate enough information to find a trade. All right. Are we at 0.8 Rs? Yep, we are. Did we get the win? No. Why? The trade's at, for the volatility, the trade's at what, 1.2 Rs or so? On initial impulses, you often can get 0.8 Rs. It's just how the market moves. So when you decide to enter a trade based on the current order flow and volatility, you can typically get 0.8 Rs out of the trade pretty stinking fast. But now my stop is really tight for the volatility. So high probability of getting stopped out too now. Because I'm in range. Alright, let's move it up a tick. I'm looking at my RBVs. There you go. Bing! You're like, what are you saying? See, here's the difference between who you may know and me. I actually took a trade in the sim, and you get to see whether the rationale I used makes any sense. So here we have a move with volume met by volume, low volume, price pushes down, creates value, attempts to break up, reverses on fairly low volume. We are afraid of the liquidity up here. And so now we have this higher high, but it shows momentum loss. And we start to break down and make lower lows against this candle. So very price action-y. And by price action, I mean candle structure. So in real time, I see that. I take a short with the stop here, and I take profit here. It's a 1R trade. What's the probability of that trade? It's above 50%. And it just keeps selling. Now in hindsight, I go, oh no, look, I could have had a big winner. Yeah, I could have if I let it run. All right, near support here. let's look at the bigger picture. I want to make sure I'm not stepping in front of something here. Forgot to put a stop loss in. Bummer. Missed it. Was going to get in if I got in here. Very tight stop right here. Before, so you see, so I'm going to show you guys something real time. You see this LVN here? If you think you see momentum loss, here, let me get rid of some of this garbage. All right, here's the LVN. The screen's also shifting. You think you see momentum loss here? What you're framing the trade out to be is, I think the momentum is gone and I want to get long right now, right here. And so you want to put a stop so close to the price action because it's testing your hypothesis about being right about momentum loss. So that's what I wanted. Get long and get out for more than 1R. We have 0 prints here. This is the bottom of prior structure. See that? So this will probably short-term come up and act like short-term resistance. So as a scalper, you can get in and out. Like the burger joint. In and out. California, which is where I live. All right. TC2. So you could have had this setup in against about, that's 1.13. The higher you put it, the lower the probability of success. But let's just say for 1R, it would have been here. So entry 41.139.25, exit 2 points higher. Done. All right, so this is now resistance as a scalper. All right, we're in. So now we just do this. You tighten it up. You think you see momentum loss, little bird? Okay, well, play it. You think you see it, play it. Boom, there's your 1R. You see? You see how we got in here? Tight stop. 1R. We're in, we're out. All right, 3 points, $150 in the last few minutes. You're like, scalping sucks. Well, if you know how to do it, you just made $150, little Padawan, in 15 minutes on a single E-mini contract. You can do it. You can do it. Anyway, if you guys are here and like what you hear, please like the video. It does help out. You know what all the rookie traders like to do? Hindsight! By the way, this is a trend line. This is going to act like support short term too. Because it's the breakout point. This is the point. So I'm going to explain something to you guys that's very important. Balance. The point at which traders out of balance were wrong. Right here. You see this? Also volume node. But the structure is more important. Who cares about a volume node without structure? You want to clearly see where the traders who are wrong get out. Need to get out. Because what? All the shorts, okay, you're positioned short here, right? You're Declan before he flipped long. And you're short at 36. And you're a new trader. And you don't play with stop losses because risk reward be damned. I don't want to admit a loss. Ever. Right? Because you've been seeing people who don't play with stop losses. And you're like, every time I play with stop loss, I just get stopped out. So, that's not a recipe for success. Although playing with stop is a recipe for success long term. So what? You're short here. Market moves against you. You're like, I'm going to hold because, okay, I'm going to switch my time frame. I'm now short because we're in a bear market. So I'm going to add. All right, so maybe your average is somewhere in here. But guess what? A lot of people who are over leveraged do. Hey, I'm not blown up yet after this big move to the upside. I'm going to hold. Just going to hold. And when it comes back to break even, God, this gets so dirty. When it comes back to break even out of what? The breakdown, a breakout point, I'm just going to cover. So is it scalpable? Probably. And if it doesn't work, guess what? You could put some risk on, tight stop. You might be able to put risk on for here, and all messed up already. The screen moved. Anyway, you can put some risk on. You see momentum loss. Same thing as up here. Momentum loss. Well, in this case, this is a big consolidation, so it may produce bigger reward. So instead of 1R, you're going 2R and potentially 3R. I'd be going 3R on this. So let's see. Are we calling it? Are we using something to give us market edge and predictive power in this market? Are we? Let's see if it plays out. If it doesn't play out, well, I'm wrong. Whatever. So what's the move? All right, here. Looks like a lot of hindsight crap to me, Mike. Okay, yeah, sure. Remember, I have to talk about it with you guys right now. Should I just get online and go make money? Should I just get offline and go make money? You guys don't get to hear about this stuff? I could do that. You know, this is benefiting you guys, not me. Except for Andre. Andre, you get it. When I decide to get off YouTube permanently, Andre, let's stay in touch, please. Because I appreciate you, man. Anyway. All right, so let's just keep it on the chart so we're not looking like liars. All right, here, stop. Entry, all right. There's the 1R exit. All right, there's 2. There's 3. All right, there you go. Let's see. See if you would get stopped out. Now, 1R already happened. You see? You know why I scalp a lot of times, Mr. Dave Gagney? Because I get to turn over my edge. I get to turn it over faster. Look at how quickly you got a little volume build right there. And time is risk, but it also produces bigger winners. All right? So you see how that there's an inverse correlation. More time, more risk, also more reward. That's how trading works. Higher probability of success, typically lower risk reward. Higher risk reward, lower probability of success. This is just the way markets work. So you need to figure out what works for your trading style as well. That's why some people are like, simplify it for me, Mike. What works better? I'm like, what's your trading style? What are you good at? Then maybe we can help you a little bit, guide you in the right direction. It's up to you though, homeboy or homegirl. This is the way. You're so new to trading, you don't know that your question is dumb. All right, now you're at 2Rs here. So if you held out for the 2R, right? You got the 2R, maybe. All right. Well, we're talking about 3Rs. You're like, but what? How do you trade? What's your single way of taking profit for every single trade, Mike? Says Dave Gagney. Sorry, Dave, I'm not picking on you, but I am. Because I was trying to explain to you that there's context for getting long and staying long in areas of the market. Sometimes it's a scalp. And sometimes a setup produces better risk reward. Based on what? Not just entry with I always take 3Rs. No. Based on prior price activity Because what? What do we trade? What do I preach on this channel more than anything else? Who do we play against? I'm gonna let somebody else answer that question. Who do we play against? Trapped payasos, essay. Retail scrubs. No, we play against trapped traders. It doesn't matter whether we think they're retail or institutional or whatever. If you play bigger, you can get more trapped. All of these payasos here are trapped. And so when we come back to that level, it has nothing to do with the big volume node. This volume node could exist because of multiple prior levels. And on this last run up, it's just a single pullback. But this volume node may be here because of the prior morning action. And in which case, if you had a move like this, maybe there wouldn't be trap traders. Maybe there would be longs that we flush through this zone. But this tight action here has Declan's. Sorry, Declan. I know you said you got +7 or something off a reversal at 32. So, I'm not really picking on you or anything. I'm just saying you were short 36 for reasons. Whatever. Maybe you reversed based on what Mr. Mike said. Maybe you didn't. I don't know. But there were trapped people like you. People who were like feeling the heat. Right? Well, you may take your stops, but guess what? The vast majority of dummies, professionals and non, don't like to take stops because we're human beings. And our human nature causes us to make human decisions that prevent us from admitting failure. Because when you take a stop, you're admitting you're wrong. Now, you've either read Mark Douglas's book about and understand that we trade in probabilities, or it takes on a very emotional quality because you don't understand probability in trading. And so it's painful. It hurts. So every time you take a stop, if you haven't read anything on psychology and Mark Douglas and stuff like that, you're going, man, every time I take my stop, it physically hurts. Hurts me mentally. It hurts me through stress, blah, blah, blah. Look at that. Look at that big order come in. Bing, bing. So this is now breaking out of a symmetrical triangle, short term to the upside. Is this our 3R level? Yes, it is. Is this the 10 SMA? Right here. Yes, it is. Is this the bottom of structure? Yes, it is. That's the reason for our profit taker coming in here. Now look, what did I say? You're going to have what? 15 or 20 minutes of time before you get back here. I mean, come on. It's a live stream, guys. It's not like this is some random-ish. We've predicted it correctly in about the time it took. You're like, yeah, but you hedged yourself the whole time. Yeah, because I don't know the future. I don't know. Living on the hard right edge of the chart right here before all this has happened, you can't talk like you know the future. Then you're the asshat that says price is going to do this. And then you all start DICK swinging against each other. We all start doing that, and this turns into a really ish is my word for SHIT. This turns into a really, really ishy chat because we're all just sitting here trying to brag, saying we know where the market's going to go like some stupid furu. No! I'm just demonstrating a little competency in market structure so that you guys know that sometimes reading the market this way will help you to recognize how it potentially may play out with a better probability than what Morad says is in the market, which is 50%. He really, I have a ton of respect for him. But if you go watch some of his old videos on professional trade management, you'll see he says things like you only have a 50% chance of being right in a trade. Then he talks about Mark Douglas, and he talks about the fact that we play probabilities. So I think he misspoke just a little bit. So, I'm not trying to bend him over and say, hey, dude, you're totally wrong. Morad's done more for the trading community than I'll ever do. So, mad respect to that man. He's probably saved more traders and made more traders than I even know. So, anyway, there. We'll take our brag off the screen. Our entry, our 3R trade, okay? That I didn't even take on a sim. Why? Because I'm talking. And I tried to get filled where I wanted to and couldn't. And so because I didn't want to trade and I don't know the future, I don't get into the trade. Another one of my rules, guys. I have lots of rules. But anyway, as Morad was talking, what he was really talking about. Sorry, looking at another trade now. Oh. Erase drawing. There we go. Oh, 700 lots up there. Wow. We go get that? Maybe. Maybe. We'll see how the market reacts to this 700 lotter up here. It's 500 lots right here, up at 41.48. But it's also, and not the best structure for it. It's BBWC, but on a very short time frame. So these don't play out as well as some of the other ones that we've talked about, which is like right here, right? You see this? But it's not a lot of time spent consolidating at that zone. But you do have a breakout bar. The problem with this BBWC right here is that it doesn't go very far down. You would want multiple legs going for a much greater distance to the downside for this to be a better BBWC here. You see that? Anyway, that 700 he is filling. They're going to get my stops. And that's okay. Maybe. Oh, they refilled. Check it out. They refilled a little bit at 48. What? 74 lots. Front of the FIFO. Then it goes 277. I want to talk like that. What is it? That 2010 flash crash guy. 9.5 trades. No. I can't do it. That guy's amazing. Yeah, it's all good, Dave. I think I explained myself. We're beating a dead horse here. But I appreciate you interacting, my friend. You're the one getting free information here. Free information. I'm over here educating for free. Not a lot of traders will do that in real time about the market and make themselves potentially look like a jackass in front of other people when their predictions about the market, their setups, are wrong. I'm willing to do it. I got confidence. Anyway. If you guys are here and like what you hear, please like, subscribe, and it helps the YouTube algorithm for viewers later on. Maybe I can afford coffee at the local coffee house rather than making it at home. Although, if you guys make espresso, so you know what's happening here? They're absorbing a bunch of the bitters here above that below below that liquidity, and it looked short term. Let's see, right there at 48, whoever filled completely immediately started hitting bids. Let's see if there's any ice there at 48 where they lifted all those contracts. We have 44 left of an original 500, it looks like. I think it's an original 500. They're not done filling there at 48. Let's see. Let's see. What's the 1R trade? The 1R trade is about down here. The 0.8R trade is about here. Yeah, about here. We can get the 0.8R trade probably immediately. Let's see. But you don't always get the 1R trade. It's just my experience. 0.8R is much easier to do. 1R, really stinking hard. You're like, that's because you suck. I don't know, maybe. I've been doing it for a while. Yeah, Matan, they are. So the red lines are 250 lots or greater. The purple lines are 400 lots or greater. That's it. I can turn it off in the footprint because we have it already here in Bookmap. I was just messing around in the footprint with it today. Studies. Where is it? Nope. Where are you? Market depth. There you go. We'll hide it for clarity. There you go. How's that? Now we can still see the same thing over here, so it's all good. And we'll move this over so we see where our average position is a little better. Whatevs. Hello, Donnie. How you doing? We're getting positive ticks. Let's go back. 48 has reloaded a little bit. 72 lots is front of the book. What's interesting is that the 44 lots already pooled and stacked. Why do we know that? They're now second in the queue behind the 72. Interesting. Do they want to get filled? That is the question. So they just hit 178 lots there. Yeah, they're just going to go hit it. There you go. We're out. It's a loser. And now we have, whatever. A loser. So what I was looking at, and this is kind of interesting, is here at 48, you have the MBO, right? And so we had 44 lots front of the book at 48. And then we came back to it, and then there was 72 lots, and the same 44 lots was now second in the queue behind it. So they pulled the 44 off and put it behind the 72. Because this is first in, first out. And left, in the leftmost side in the MBO is their position or estimated position in the queue for MBO. So that's what that is. And that's why I was saying what I was saying earlier. So sometimes really quick, so look, there's 44 lots now being added here too. All over the place. Someone likes to trade with 44. Somebody likes that number. And it's the same player. 44, 44, they're front of the queue. They're going to fill. Are they going to go roast them? I think they're going to roast them. Sorry, 44. We'll see. A little bit of volume up in here, but not much. Not very much. Dave says, I'm a little condescending. Well, Dave, it's really easy to take pot shots at somebody, um, or to appear to, and maybe your conversational skills are a little lacking as well. I can admit maybe mine are, but you should take that as well, because you're kind of coming in, maybe not introducing yourself in a nice way or asking questions, and you got to realize all the guns are pointed at me. So some people here support what I'm doing, and others just come in and they try to strip it all away. And you are pretty persistent in your line of questioning. So you should be a little bit honest about your approach as well. And I'll be honest about mine. And then we can have a good dialogue. Don't bother, Mike. I know. He says he appreciates what I'm doing. It's just, some people don't have, they lack social skills. And then they're like, wait, can't I just ask direct questions repeatedly? I get this same thing in the comments on YouTube, where some little 15-year-old comes in and asks questions repeatedly without saying, "Hey, I appreciate your response." They just go from one question to the next like a child. And I get it. There's some really young kids in, but I'm a little more old school. If you came up to me on the street and were like, "What are you doing? Why are you doing this? Why are you doing that? Why are you doing this? Why are you doing that?" and couldn't conversate normally, I'd just be like, "Dude, F you." Like, you just wouldn't do that to somebody. But online, people don't. They, they yeah, it's just a whole thing. That's exactly it, Kermit. I am customer service for a lot of these brand new Sierra chart people or traders. And Dave's like, "I'll unsubscribe." I'm like, "I don't care. Get the F out of here." You think I really care? Like, then why are you doing it? Go watch some of my old videos. Oh gosh. Like, oh, so angry. Just, I'm not really angry. It's just I deal with a lot of people like this. A lot. And I get even more people emailing me demanding stuff, and I'm like, golly, go somewhere else, please. Forex Moneta. I am 42 years old. Yeah, Matan. Can you hear the treadmill right now? I hope not. I have the yeah, Matan. I have a standing desk treadmill under it. It's good. It I highly recommend it if you're trading a lot, because the movement at a trading desk allows you to get a little more oxygen flowing around, and I don't know. That's just good for your cognitive activity. So I end up being able to trade for a lot longer than if I were just sitting in a chair. And it's why I'm able to be on like YouTube streams and talk for a while about the markets and not totally fatigue. Otherwise, if I was on a chair, I'd be like, nope. I only have so much brain power. Hey, I appreciate it. Niet, full things. I do, Forex Moneta. I have a ceiling fan going. Forex, he's 27. Oh, to be 27. I was going through and cleaning out my old Google, I guess it's photos, last night, as a matter of fact. And I came across some videos of me and my wife when I was 24, 25, and my 4-year-old was watching the videos with me, and he's like, "Daddy, you look a lot different." I'm glad he said it without being super blunt about it. Like, you look a lot better then than you do now. Like, yep, look at Mama. Look at Mama. Doesn't she look? Oh, Mama looks way different. Does she look younger? Yeah. Where was I? You were just a twinkle in our eye. What does that mean? Well, we were just thinking about you. You didn't exist yet. Oh, where were where were my cousins? He has a cousin named Tatiana, and anyway, he says where was Tati? He calls her Tati. Where was Tati? Well, Tati wasn't even born yet. You know, Tati's like 7. She's like 7. Ben's like 4. He wasn't even born yet. Like, nope, not even. Crazy. Time flies. Enjoy your family. It's not all about trading. That's why I got rid of Discord, guys. That's why I got rid of Twitch as well. It's too much. Too much social media for nothing. The Discord, I'd just pay for it. I'd pay for all the nitro. I'd pay for the bots to stream news in. Didn't charge anybody anything ever. Just pay for it, give everybody my time. In the hopes to connect with cool people, I did. I connected with lots of cool people. Many of the cool people whom I'm still in contact with. Because, once you're a cool person, you're always a cool person. Unless unless you show your colors and you're not a cool person. Right? You're a business person. And you get some of that too. Oh, Mike, you're no longer offering me any of your wonderful trading calls during the day on Discord live, sharing your stream, calling the market ahead of time. I'm gone. I'm going to no longer communicate much with you. Or if I do, it's going to be curt, to the point, and a little rude. That happens too, guys. We all know this. People are, what can you do for me today is people's attitudes. I'm not going to have enough foresight to realize you may be able to do something for me tomorrow. See, that's the other short end of the stick that people don't really realize as well. Like, if you have that mentality, you should at least stay connected to somebody who can educate you for many years to come, right? So just arguing it from their perspective. But some people aren't even smart enough to do that. They can only see what you give them benefit for today, right now. Not enough foresight to network and stay connected. Anyway, enough of this negativity. Is it negativity or is it just observing human nature? Yeah, it's human nature. The markets are all about human nature, aren't they? Shorts getting out here, producing a big bounce. You see how, guys, how the narrative and understanding the structure of the market, it does help you. You're like, but Mike, you didn't take the trade. This isn't about me taking the trade. This is about you getting educated so that you can take the trade the next time. This is charity from me to you. In other words, I'm giving you something of great value, which is how to potentially look at market scenarios and gauge why the scenario that you're in right now may be a better one than what you've been taught. Andre, my back is good um, as long as I'm walking, which I am, right? So now, if I have my hands on the keyboard and my forearms aren't resting properly on the desk, then I'm essentially walking with my hands in front of me. And that can put a lot of strain over many hours. So I've been walking with you guys for 2 hours on the stream. So if I had been, say, moving my mouse around, typing or whatever, and not resting my forearms on the desk, then my lower back would be feeling strain. But I've gotten good at not doing that. So you do have to do it with the right form, or you build up a little bit of muscle there, right? Because as human beings, we would have been in nature if we were, I don't know, more labor oriented. If we carried rocks around all day, say to build our next hut, or to make the. Hold on. All right, I'm in the stop zone, liquidity zone. We would have been carrying things like rocks around, walking with them, right, doing exercises, but maybe not the repetitive long-term movement that we would be doing, like we do today, right? Which is we're at desk, we click the same button, and then your finger starts to hurt, right? You get carpal tunnel or whatever, right? Oh God, they're gonna go take my stop again. That liquidity sitting up there. 175 lots are back of the book there at 50. Let's see. I accept it. I accept that it may be a loser. No emotional quality here. But I think my reward on this trade, if I'm right, is to come all the way back. So this is how I'm structuring this trade right now. Stop. I like how Sierra Chart does it. You put your stop in first. Ha ha. It's nice. It's a good thing. When you use the risk. Okay, we're stopped out. Anyway, my my first profit taker would be here into the LVN, and then because it was a 2 lot, I would have taken one off here and tried to get another one here. So in other words, my potential reward for the trade would have been somewhere here. So about 3 Rs. But I'm wrong on the trade. I'm taking I'm taking shots at a trade that uh, maybe not so great at this point. Maybe not so great. I can do better. What's the next trade here? Uh-oh, down to two. 2 points now on the sim. Yeah, but anyway, that repeated movement, even if it's low, like not a lot of weight or anything, damn, that's where the injuries come in as you get old. You stinkers, man. Now you want. Oh, wait a second. That's the wrong one. All right. What are you doing, man? Well, I really like fake out trades. I like when they sell it. It's immediately met with sellers and comes right back to the breakout point. And I think in this scenario, so let me be clear. This for me is like a 50-50 setup. This is not a higher than 50% setup. But because we could have essentially potentially a double top, um, the reward is much greater, all the way down to 38. And that's why I'm taking it. I consider it a 50% probability trade, but I consider it a 3 or 4 R trade. So, you can easily do the math on that, right? Doesn't take a genius. Hence, quickly get in. Uh, Forex. I made my first trades at like 21 years old. Scottrade. $14 commissions, something like that. And I remember when it went to like $8 or something. I was so happy. I was like, oh, it's only $8. That was a long time ago, but you know, trading full time versus not, it's a totally different story. So let's see if this trade plays out. And I've made up. You know, hey, Andre, you are so right. I need to go back and pull some of these stories out about my trading. Because how many times now have I told the story about, the 25 to 30% loss in 2017 in a single day, and I added to my NASDAQ long as the market fell 400 points, stopped out. How many times have I told that story? What, 3, 4 times now? Lappin says, were you phoning in orders? Yeah, it felt like it. Oh, are we going to go up and take my stops? Oh, well. Maybe. Maybe, baby. Do you guys like the way that the yeah, sorry, Pierrick. I know, man. So I need it. What I need to do is do what Andre suggests, which is pull some of these things out and then just upload little 20, 15, 20-minute blurbs. And then I could just point people, hey, yeah, I talked about that in this video. Right? And then I make a few shekels when you watch the video and you aren't subscribed to YouTube Premium. By the way, YouTube Premium is awesome. I can't tell you how much time that has saved me not watching commercials anymore. I must admit, Andre, I'm an idiot for not subscribing to that earlier. I mean, that has like collapsed time for me, man. It's ridiculous. It's hot in my office right now. Corey W, I don't know if you're kidding. Yeah, it's so good. Was it you, Andre? No, it was Rainer. Sorry. Rainer Blanky told me to do that. I just realized. You have premium too, but Rainer was the one that told me about it. So I'm misremembering. Did I, Corey? Huh. Corey, I'm trying to remember our conversation. One trade. Was it in the risk management um, channel or something like that? I'm really happy that it did, Corey. Awesome. So look here, guys. As this market oscillates, and I'm putting my stop in a short-term position of being in the path of oscillation, could I have, I'm just using hindsight, could I have taken a zero point 0.8 R win? Yes. So I repeat this to you guys all the time. 0.8 Rs, you can get them. 1 Rs, a little harder. 2 Rs, even harder. You got to be a little patient in the market. So the market is this like efficiency machine, isn't it? Look at how they're rebidding right now. You see this? how they're rebidding. Someone's absorbing here on this on the ask. See this volume bar is growing a bit. They keep rebidding, rebidding, rebidding. Shorts are getting nervous. There's a seller stepping up passively on this tick right here at 51. I don't know if they're going to hold up the market, but we can see that price action happening right now. Let's see. Yeah, and you got the short-term flush of those dumb little scalpers. Maybe. See that? How they just flushed? So there's probably, I've watched some of Fat Cat's videos, and I even was on his Discord for a little bit. And he will trade order flow, and it sounds like he trades it very well. I have respect for somebody who has a very nuanced view of order flow like he does, because I believe markets are nuanced, and the best trading comes from understanding that nuance. I wouldn't be surprised if he tried to enter short here, and if he took 3 or 4 ticks right there. I see Fat Cat right there. I don't know. We're going to get our stops taken here, I think. Yeah. Oh. Are we losing? Yes, we are. We're now losing. You're like, now you're a breakout trader. Yeah, well, give it a shot. What time is it? 12:30? M period. Make your money fast. A minute and a half into M period. Did we have the little retracement? Now we have a poor high. Wait, what? 100% extension above us? Can we target 100%? What is 100%? We have a chance to go break 100%. So 56.25. So it's not a great trade in retrospect. We're so close to 100% extension up here. I'm getting long for other reasons. Higher lows, higher highs. But in terms of the TPO being so close to 100%, not great location. So maybe I lied. Maybe I am taking ishy trades on a sim. Well, fingers crossed. Hope it works out. Now I sound like a rook. All right, where's our 1R trade? Right into 100%. Okay, right there. It's a little better than 1R. Let's see if we can turn this on right there. All right, now it's up here. See, now you can see it over here. Scratch, baby. Psych channel. Yeah, I think it was the psych channel. Man, it sure is a lot more relaxing to trade a sim than to even trade micros. And that, that goes to the fact that real money always more, even if it's a small amount of money, more stressful than a sim. I'm super relaxed here trading a sim. Super. I'm like, I don't even care. I'll talk about whatever. Cassian says, hi, I'm new to your channel. I see you're using a delta profile on the upper chart right side. I am? So, I didn't read the whole question. Currently starting to use it. Are there any specific setups on it helping your decision making for trades? Thank you. Okay, so I have to scroll. Yeah. So the outline is volume. Okay. And the innermost profile here is overnight. This is RTH. The numbers themselves are delta. That's it. Now, this chart over here, you are seeing, sorry, Oh yeah, baby. This chart over here, you're seeing delta bars without seeing the numbers. And then you're seeing a volume profile. So anyway, I'm gonna just look at this market real quick. We have liquidity resting at 56 and a quarter. In a perfect world, we would want this to hold and push up. That's in a perfect world. I know. 56.25. 56.25. Or no, 55.25. I'm just looking at the 55.25s. 55.25 had a small iceberg there. There comes the profit takers. Absorbed. Short-term profit taking absorbed. Let's see if we have round 2 and round 3. I don't think so. I think we're going up, up, up and away. A little bit of ice. Oh, they got through it at 56. Rebidding or on the ask here. Let's see. Diamond hands. Oh, we'll see. We'll see. There you go. Oh, really? One tick away? Come on. Come on now. Come on. One more. Yeah, buddy. Runner. We have a runner on our hands. Yeah, of course it's a sim. Doesn't matter. Still trying to kind of sort of trade it the same way. Got my 2R 60-point banger on NQ. Booyah! Indigo Mines. Well done, my friend. Indigo. I've known Indigo for a long time. I think. Indigo, how long have we known each other? Has it been 2 years now? Is that long in trading? I think that's pretty long. Two years, gee. Yeah, I think it has been 2 years. Thanks, Oliver. Once in a great while. You know what I like to hashtag on Twitter all the time? I win some, I lose some. Hopefully I win more than I lose by risk reward or just net points over time. That is the hope. My question on this trade, let's see, is 8 points in profit is when this thing activates as a trail stop to the upside, by the way. All right, so let's look here. We're at the 100% extension. Oops. We have this old poor high, poor low up here from a prior day. Into 65, there's resistance, but it wouldn't surprise me if we rip through all of that and go get stops into the close. Right up there. Here. And that's from RTH, right? So USA2 is right past the cash close, and then Asia, obviously overnight, Europe, overnight, and here we are into this RTH. So we have a poor high that we can target short term right now. So 20 minutes into the close, plenty of time. Let's go straight up. Let's go get it. When does this trail stop activate is my question. It's gotta be, let's see, we're almost 8 points into profit. Yeah, I think it's going to activate right now. This will probably move once it hits 60 and a... Should move anytime. 59.75. Yeah, 59.75. This will probably move. Yeah, juicy stuff. You know, people ask me about poor highs and lows all the time. You get a short-term poor high or poor low. What do? I'm like, well, short-term, we might just reverse off of it. But when you go back to a poor high that you've sort of... Let's see if this trail stop activates. Come on. Can you activate yet? It's not activated. It should activate at plus 8 points in profit. Let's see, 56, 60, and then it trails 3 points. And I can adjust it from there and set the adjustment value. I'm just curious when it's going to activate. Anyway, a little bit of short-term interest up here. You see that? Interest to buy and sell. Doesn't mean it's going to come all the way back. It might. Yeah, I mean, kind of. Same idea. Forex. So anyway, what I was saying about poor highs and poor lows, they become targets when you come back to them. That's how I interpret them most of the time. I don't just shoot for, oh, there's a poor low intraday, I'm going to short any retracement. No. Whale? Are we going to get stopped? Yeah. There's some aggressive profit taking here. Let's see. Right up at the 100%, just above the 100%. So what's the support, right? Right where I'm long right now is support short term on the TPO. It's 53 is support. So I may, let me look at this market today on a 5-minute chart, which you guys don't see. 1, 2, oof, and 53. Man. Not super clear for me in terms of like an Elliott wave. And our position was snuffed out. Goodbye position. All right. Cancel the orders. Cancel the sims. Cancel. We got this low volume node here on the way down at 53. That's the top of the 3-wide TPO up here. I don't know. Today, if you're here, remember we were talking about volumes overlapping? And then Timmy was pointing out, he's like, you know, a lot of times on these footprints, you'll see like, all right, you get this. Timmy brings up such good points. He's like, you get this volume node, and then the next one, it kind of builds out like this, just filling it in. And then if price moves in, it moves really quickly through the one that has a really wide area, and then it'll sometimes distribute at the bottom and then kind of rotate back up and keep going. Yeah, that is how it works, right? Prices do this, right? And then the next volume node often will like this, right? Like that. And then prices, if they move back up through this prior one, they're just rotating out weak hands. So interesting. And then if this doesn't act like resistance and it just makes higher high, you know who's in control. Or at least you think you know who's in control. The longs are. It's fascinating, guys. Am I being forced to chase up here? How about this? Right here. What is that? 59 and a quarter? All right, let's try it. That was a stop limit order. Yeah, I'm forcing, huh? That's okay. We can always put a stop loss in. It's okay. Nothing wrong with that. It goes or it doesn't. What's the reward? The reward is still up here at, I don't know, 70 somewhere. So, up here. You see how I have this? 531. RTH high. Stops above. It's all good, man. Shift F9. Perfect now. Oh, okay. If you can't buy highs sometimes, you're stuck not trading a lot. So there's that. Peep rot on the Nasdaq. Peep rot. Okay. Oh yeah, I see it. Nasdaq. Wonder if how many dislikes this video has. Probably one. And it's probably Dave Gagney or whatever his name was. Sorry, Dave. Getting tired of walking, by the way. I appreciate it, Dave. There's a trader, Timmy, Trades Timmy, at Trades Timmy. And Timmy was part of our Discord that no longer exists. And me and Timmy used to argue like brothers. I mean, just effing argue. And he would insult me, and I'd never insult him. But I still talk to Timmy all the time. Because I don't mind people raining on my hypotheses at all. At all. I prefer it. I live in the United States, and I think the country was founded on some pretty good principles. A lot of problems, blah, blah, and that thing's perfect. I don't want to get into politics. But my point is, a lot of these guys, oh, someone's willing to sell up here. They're buying against them. Ha! You're going to be wrong. My point is, change doesn't happen, improvement doesn't happen, unless we vociferously, passionately debate and move along the narrative. So without the Dave Gagneys of the world, I I stagnate and eventually die. I just roll over and I become a dinosaur. So it's all good. Murder algo time. Oh sheesh. You're right. Guess what? Let's do this. Thank you for that. There it is. Oh, you bastards. Look at that. Alright, back in. I think we're going up. Now I lost my place in line, though, which is fine. Plus 3,000 on the tick. You see the 90 lot bidder here at 62.75? That's a little liquidity. A little bit. Okay? Let's see if they roast that. Yep, they do. Thank you very much, Kermit. If I was trading real money, Kermit, I would have sent you like $10 or something. Can I do that? Can I right click and send you $10? Let's see. I don't know how it works. Nope, I can't. Bummer. Just offloading my line 90 lot. Yeah. I'm still annoyed by this NASDAQ. These screens are all blank. Does my... Nope, my mouse doesn't even go over. So, okay. You know what? Volume chart. What is it pointing to? Let's see. Properties. Properties for NQ volume chart. That's why. It's just pointing to the totally wrong thing. Huh. Weird. It's like it reset it. Weird. That is so weird. NQ TPO chart. Where does that point? I'll bet you it points to the same time in sales. It's a bug. Yep. Does the time in sales come up for a second? Yes, it does. Huh. The restarting of OBS did something weird. Because that should be a capture whole screen. And then oh God, look at this market moving without me. And I still have a one lot up there to sell on the sim. Okay, anyway. Bummer. All right. Well, I guess we'll get out of here. Anyway. It's just my OBS is doing funny things without my consent. That's all. All right, so baby, don't hurt me no more. That's the song that's going through my head. Don't hurt me. Don't hurt me. Don't hurt my sim pride, please. Anyway. Well, look at how many times I got out of my position only to get back in. And now it's going to be what? Negative 2.5. So what? 10 points? Yeah, 10.4. And it's a sim, so there's no slippage. Unrealistic. Rainer! How goes the day for you, Rainer? Rainer, I'm on sim. Hey, Rainer, do you, I can't remember. Do you use CQG API? Like, so is your routing CQG? Anybody else here have CQG routing and have any issues with disconnects today with the API? I had tons of disconnects all morning. I haven't checked the Sierra chart support board. I actually want to get out and trade my live account right now, guys. So I'm gonna head out. Have a good one. Appreciate it. No problem. Okay, have a good one. Take care. Thank you, Dave.